Okay, very good morning. Wednesday, 31st of January. Hope everyone is well. Gonna do, in terms of approaching this briefing, I'm just going to talk purely about the news because there's quite a few things to get you up to speed on. And then I'm going to hand over straight away to Sam, and then he's going to look at the charts in their entirety, go through the individual products and asset classes and look at some trade strategies for today. But just to give you an overall view of what's going on at the moment, equity index futures on the front foot. We did have a little bit of a dip overnight in Asia, but overall Trump's State of Union address was relatively well received, and equity markets did move a little higher despite the dollar seeing some weakness after he spoke. So a bit of recovery from the lows. As a stat, the S&P 500, having closed down last night just over 1%, was its worst day since mid-August of 2017. It was the worst two-day fall, which in total 1.76% lower since May. Likewise, the other indices, the Dow and the Nasdaq, were lower. The Dow was down about 1.4%, so obviously volatility-wise, one of the biggest moves that we've seen in a while. And talking of volatility, the VIX index did move up to an intraday high of just short of 15.5, which is around the highest since mid-August, as well as a reference point. So again, we haven't seen this kind of downside price movement, certainly in the equity space, for quite a bit of time. But since then, things have steadied, and we're seeing a bit of a recovery this morning. Elsewhere, fixed income, though, also seeing a bit of a lift. So you've got a bit of a almost an opposite of a policy tightening play, where you've got equities and bonds moving a little higher this morning. One of the things was yesterday, when the equity market was moving lower, fixed income was relatively unmoved because we didn't get much of a feed through. It was fairly isolated to the equity market, but we are starting to see a little bit of movement. Bunds just breaching the previous day's highs, but again, I'll leave the chart commentary to Sam in the next few minutes. So let's just get stuck into, firstly, some of the reasoning behind yesterday's equity move, because quite a few of the questions that I had directed to me yesterday was, why are we selling off? Because it wasn't a case of really there was one definitive kind of single headline sparking the market negativity, more a bit of a capitulation of different things. So rising yield certainly is something which has caught headlines. The US 10-year yield now back to highest levels that we've been since around April of 2014. You've got this kind of tip towards expectations of inflation going to re-emerge, and consequently then policy tightening that's going to come. And we'll talk about the Fed. Obviously we've got the decision tonight, but really we're looking towards March, when the market is priced in for the Fed to hike interest rates again. And then yesterday you had oil prices continuing to pair off the initial kind of sharp run higher that we had towards 67 bucks. We're now obviously trading back a 63 handle earlier this morning, and so negativity there in oil price movement. And then there's been quite a few single stock headlines. Just to recap, we were looking at this yesterday, and this is the heat map of the S&P 500, and drawing particular significance to the healthcare plan sector. And this came because essentially the story being that Amazon's going to team up with Berkshire Hathaway and JP Morgan to make a new healthcare company to offer their own healthcare plans to employees, so to speak, on a wide scale, cost-cutting some of the current providers. And the healthcare names got really hit hard on the back of that and led the decline. Some other names as well. Pfizer, of course, yesterday, they had their corporate earnings and they disappointed. Their shares finished down over 3%. We're talking about large market cap names here. And then one of the other names, Apple, shares declined again yesterday, and obviously this is a big weighted company as well in the index, and a read across for the kind of tech sentiment, which of course front runs then the tech earnings. We get Facebook, Microsoft kicking things off later on this evening. Apple obviously has underperformed pretty much 2 days back to back. The reports over the weekend about them paring back their production for the iPhone 10 going into Q1, that was leaked in Japanese press. And then yesterday, this kind of investigation ongoing with the authorities about their manipulation of the software updates, which made kind of old phones redundant, somewhat purposefully, obviously, to kind of promote upgrading of phones. And they're currently in the midst of ongoing investigation into that. So Apple shares also coming under some pressure. So there's been a couple of different things here, and then the most probably pertinent, of course, is obviously a bit of profit taking. We're at month end. We've had the best January on record. Now let's just take a look at the move that we've had. Obviously we've printed all-time record highs already consistently as we've come in through 2018, but check out the move that we've had from when we came in at the beginning of the year, from really here to all the way up to the peak. We rallied 7.5% in the S&P, and I'm not talking Bitcoin or crypto, talking the S&P 500 up nearly 8% in less than a month. That's phenomenal gains, going off a historical precedent. So profit taking as well as probably the big part of this, and it coming towards the tail end, the last really 2 trading days or so before month end. And so a couple of different reasons, I think, all coming together to then be a fairly potent force to weigh on these equity markets most recently is what we've been seeing. One thing I would say is that the guy that called Brexit, the guy that called Trump, the guy that keeps getting it right, Sam North, has come in this morning saying if we do not print lows again in the US equity market today, then this is going to be what we saw yesterday, the lowest point for the S&P for the entire year. He's making the call. So if we don't push beyond the low point of yesterday today, he's saying that at this point, yesterday, the level of which you saw was the lowest level that index is going to print for 2018. You heard it here first. All right, a few other things we've got to have a look at. Of course, this guy, this is probably my favorite of the pictures. You can just imagine what he was saying at this particular point in time. But obviously, apparently there was chants during his State of Union address, USA, USA, and so on and so forth. So, you know, his ability to still get the room pumped is still there. But what is it that he actually said? And in summary, not a great deal. Trump's olive branch to Democrats cut short because he was still a bit divisive with his commentary and his view about immigration in particular, which has obviously been the real focal point of the last couple of weeks with the latest stopgap funding bill that was passed because of the immigration policies amongst children in particular. The other things that he spoke about were things like the corporate tax cuts, how that's being passed through to millions of US workers and how it's going to benefit them. He stated there's never been a better time to start living the American dream. On trade, he was talking about America has finally turned the page on unfair trade deals. And then he kind of went on to talk about the infrastructure plans and how that's going to be his next kind of big gift to the markets and to the American people. But it was relatively short, in summary, on actual policy detail, which is pretty much the norm, I would suggest, with Trump. But overall, I would say, again, much like his speech in Davos that we had at the tail end of last week, he didn't really rock the boat too much. And if anything, you know, this speech hasn't really created too much of an impact on market prices. Moving on, one thing is you'll probably noticed there was quite an aggressive fall in the Australian dollar overnight. Now that has been paired as we've come in this morning, but just to give you an insight as to the reasoning why the Aussie weakened so much overnight, and this was purely down to economic data. The Australian CPI reading came in weaker than expected, both month on month and year on year. 0.6% against 0.7 was the reading. So inflation misses overnight in Australia, but again, as I said, the Aussie has recovered. Elsewhere, we've had PMI data. So this kind of kicks off the kind of global PMI readings. Firstly, starting off in China, where you've had manufacturing come in, actually was an 8-month low, I believe. So China's manufacturing sector grew at the slowest pace than forecast in January as output and new orders dipped. But as you will see, non-manufacturing and services sub-index has picked up some pace. Elsewhere, Japan industrial output has beat expectations as activity has picked up pace. So industrial production was up 2.7% in the month of December. And so, a bit of a mixed picture. Japan generally upbeat on that reading. Overall, China as well, still the same. Not forgetting, although this is a multi-month low in manufacturing, it still is fairly comfortably above the key 50 level. Other things that we've had, of course, we get the Department of Energy's crude oil inventory numbers later on this evening. We had the APIs last night, so just a quick look of what we've had. And if you look at your crude oil price this morning, you'll notice that we are lower. So if I just quickly flip over to the chart, you'll recognize this particular, if I just highlight it here, this price point where we dipped overnight. We broke the late afternoon lows from yesterday. That was because of the numbers, because we had the biggest build since September of 2017 in the headline crude figure. We had a build of 3.229 million. Expectations were for a build of just shy of 1 million. Cushing, though, was a drawdown of a fairly large size, 2.383 million, but gasoline was a slightly larger build, 2.692 million. Distillates was a draw of 4 million. But again, overall reaction initially last night was some downside. However, with a weaker dollar, we have managed to recover some of that to trade at pretty much $64 this morning as we come in. Other headlines that have grabbed a bit of attention this morning, quite a bit of coverage in regards to Theresa May, under pressure to resign. UK May says she's not a quitter. So again, as we were kind of discussing on the opening briefing for the week on Monday, even though there's been renewed calls about her authority and ability to lead the Conservative Party, I don't really think this is going to amount to too much yet. It may, as we get closer towards the March really key EU summit on trade talks and the securing of a transitional deal. What I do expect is actually political uncertainty to intensify as we get into the back end of Feb and certainly in the middle of March. That's when the pressure will be on Theresa May. And if she is going to be pushed aside or resign, I don't think it's going to happen now. It's more likely, if that were to happen, it's going to happen towards March. And even then, I still don't think it's going to happen at that point. So just keeping you informed of the latest kind of Brexit talks. Other things, of course, all of you guys who trade the index futures, like Ryan, for example, on the trading floor, I know for sure he can already tell me the Siemens earnings, the ArcelorMittal earnings. He can already list me off the Capita, Lonza, Julius Baer, ING earnings, because he's an index trader. But hopefully all you guys are equally as informed. So this is what's absolutely key during European earnings season. You've got to know the individual components, particularly when there's very large, the biggest companies reporting of their respective index. So Siemens, for example, their shares have actually been relatively unfazed. So despite first quarter profits at Siemens weighed down by struggling power and gas units, but Europe's large industrial conglomerate mitigated the downturn with growth in its mobility division. And so some signs of some subdivisions performing well has mitigated the overall downturn in profits at the firm. As such then, they haven't gapped significantly lower, they're fairly unchanged at the moment. Other companies, of course, ArcelorMittal, big French firm boosting annual profit as steel market recovers. And then you've had Santander, one of the larger banks, obviously in the IBEX, post a healthy Q4 profit as US impairments hit. So the bottom line was hit by an extraordinary impairment in its US unit, but typically these tend to get written off in terms of X items and so on. All right, quick look at the calendar, and then I'll hand you over to Sam. So the feature of this morning really is going to be at 10 o'clock. If you're looking at any European assets, you've got the Eurozone inflation flash readings for January. These are obviously very important from a central bank policy setting measurement. We are looking for 0.1 decreases. Now, quite interestingly, we had the German state CPIs yesterday of which all on the month-on-month perspective saw quite a big flip back into negative numbers. So it'd be interesting to see how this inflation figure comes out, because obviously the more on the balance, the ECB have kind of been turning slightly towards becoming more hawkish, or at least less dovish, and obviously they need inflation to be moving gradually upwards to cement that view of policy tightening. So whether that materializes or not, we're going to find out at 10 o'clock will be key. Then, of course, we get the kind of prelude to non-farm payrolls on Friday. We get the US ADP national employment number. It's coming at 1:15. Then in the afternoon, really the focus will be on the energy inventory numbers. Not until the evening, which at 7 o'clock, we'll get the FOMC interest rate decision. So just so you're aware, if you guys want to, the guys here on the floor, if you want to head home, you can tune in on Trading Live. I'll be here in the office and I'll cover it in full. So please do tune in, and any questions you have at that time, I'll be available in the chat room if you want to access it from home and trade it on your accounts from there. Looking at the actual FOMC, this is of course the very last one from Janet Yellen. So she hands over the reins to Jerome Powell. As of this evening, he will be then governing for meetings thereafter. So a couple of things. One is the January meeting is what we're looking at, just a statement. You're not going to get a press conference with her or anything like that, no projections. And the expectation here is for no change, because if we start looking down, market expectation in terms of pricing is that March is the month when the Fed are next going to move interest rates. So new Fed Chairman Powell seems likely to raise rates then. This is how the market is priced at this particular point in time at the end of January for the probability of a 25 basis point increase in March. Market pricing in short-term rates in the US is currently at 87% probability of that hike occurring in March. So overall, what are we expecting from Janet Yellen this evening? Well, the statement from the FOMC, I would be expecting a slightly upbeat tone. So if anything, it could err on the side of being perceived slightly more hawkish, which kind of fits into the narrative of continuation of further improvements in the US economic kind of picture. And I'd be expecting them to also be fairly confident still with their expectations about inflation picking up in the future to warrant then these increases coming further ahead in the months to come. All right, going to hand you over to Sam then, and he's going to look at some of the charts. So wish you all a good day. I'll catch you later on in the chat room.
Yeah, hi guys, good morning. Just before we have a look over the currencies as usual to begin with, just going to bring up the DAX here, which is just at a quite, or had just got to quite an interesting level. So it makes it a bit bigger, easier to see. You can see pretty much to the tick found resistance around here. Just going to circle the area to make it a bit clearer along with that line. So I wouldn't surprise to see us, a short-term top here and see us perhaps start to drift down from here, as well as European equities, which obviously have that tendency to sort of lead the way. You've got American just finding resistance, similar sort of time. Let's have a look over at the Dow as well, which is finding that pivot, previous high of the day, and NASDAQ, you got it high of the day sort of area as well. So short-term tops for the day in equities could be found around here. This is sort of the next hurdle, perhaps, to see us continue. In terms of areas to look to get in, as Ant mentioned, I do feel if we can push ahead today and avoid making a new low, I do feel this is it for definitely a while anyway. But let's have a look at putting a couple of trends on here. Price is getting squeezed, the low is getting higher. So from a technical point of view, definitely quite interesting to have a look. And I mean, this is the NASDAQ. I'm sure we could do this as well on other markets, albeit just a bit steeper, but you can see very nicely respected here on the S&P, 1, 2, 3 touches. So we'll be preferring the upside, but again, only really when the buyers sort of come in. So those technical pushes, and with markets like this, it's not a case of wanting to jump in straight away. You can see above the high for the S&P, you've got quite a few areas from yesterday where the sellers did take over, and you would be looking to take profit there. Euro stocks just on the high, as we speak, but again, similar to other markets, you have resistance levels just a bit above. Back on to the currencies, you can see just the euro is coming under a slight bit of pressure here as the dollar perhaps strengthens a bit, although US dollar index still down for the day, although has been recovering over the last sort of 15 minutes or so. In terms of areas where we could sort of find support, obviously you've got this area this morning, early hours Asian session, where we did push higher and haven't come back to test it since, and obviously the pivot has reacted very well this morning. Aussie dollar, sorry, just finding support now on that pivot. Found good resistance in the early hours, finding a bit of support now. Definitely one to keep an eye on here for that pair. The pound, which, you know, when I woke up this morning, it was actually just below that R1, and I'd had one of the trades I was thinking about, it might have a go here, but just having a look back at the previous, well, what you can see on the chart, it has really struggled every time it's got near there to really push above. You can see this would have been, Thursday, just didn't fancy it. Friday, nope. Obviously the Monday, you know, the dollar sort of came back into play a bit, but even yesterday, really struggling to push higher. So for now, holding true. You've got a bit of obviously resistance from that area on Friday that it found a bit of resistance on. But yeah, pound struggled to really, you know, carry on, push higher. So again, it would be a case of only getting involved in this market when there's a confirmed break, and you know, not necessarily having the biggest stop loss on it. Just having a look at the way it has traded over the last few days. Dollar CAD, just going to have a quick look over as that's just picking up a tad here. Using one of the lows from yesterday, last week, sorry, just finding a slight resistance on there, although S1 also looks decent. I think the level today that I do prefer, and it's always a tricky one trading it when the oil data is out later in the day, but yesterday's low, I know the classic has already worked, but yesterday's low for dollar CAD looks still a good level to perhaps continue this sort of trend, albeit if you were to look just purely at this chart, you would say it is a very range bound trade, albeit slightly to the downside. So that's the sort of area I'd be focusing on as it stands right now. Dollar yen, similar chart. These two have been pretty correlated as of late. It's a tricky one to trade though, I feel, you know, dollar yen yesterday with everything that was going on. It just didn't want to push lower before coming back higher, and then just sort of getting a bit messy around the day's range. Finding a bit of resistance on the pivot, which was also the low during the Asian session. But nice sort of technical bias, I think, is still to the downside. These lows getting squeezed in, along with the fact that the lows, other than yesterday, were getting lower as well. I do perhaps prefer the downside as well. Oil, I mean, focus is going to be on to 330 really for those that do trade it. You've got a couple of really good sort of technical opportunities. I feel if nothing was to really change, you've got yesterday's low in the morning, which we then found resistance on late in the evening around 7 before obviously the data comes out. That still is a very good area to get in. We're finding a high around here now. The level me and Ant talked about in the chart yesterday worked quite nicely around that high of the 22nd, pretty much to the tick, working there. So it has been quite technical, other than the sort of the fundamental downside last night. Always a tricky one though, of course, to trade before the release, and it would be again something you don't necessarily want to get involved in too big a size. Low of the 23rd, the low of today. So quite a nice technical product. You're getting the opportunities for pullbacks each day. You know, yesterday it worked quite well on 2 occasions. So I wouldn't be going too aggressive at all, and patiently waiting for that. Gold sort of had this pullback from late last week as well for gold, which had been on a really good uptrend from sort of early to middle December. Prefer the downside, I would say, but in terms of actually looking at this market for an entry, I think it would be a case of, you know, once it breaks let me just lower the time frame down. The trade that I like here would be if we can break through. Let me just get a rectangle this area, and it's sort of pre-planning this, so obviously it could well be that my idea doesn't come into play, but a break of this area that I've sort of squared up to then come back to retest it and then target towards the low, sort of continuing that recent trend, if you like. But that trade again will only come into play if it does break through there. Worth keeping an eye, I'd say, obviously now, just on whether the DAX can still find resistance there. In terms of pullback areas, obviously the pivot was quite good resistance early doors, and then you've got an interesting point in the market where we found a bit of resistance last night as well, which could obviously act as support for the day. In terms of equities, just to revisit that in the States, I feel this is for all of them, and I'll just flick through. So you've got S&P, you've got Dow Jones, and the Nasdaq. You can see all those lines on there, so it's an important part. We have in previous days, and it doesn't matter which one I choose, really struggled to push higher when found good resistance. It wasn't just yesterday even. Let me just mark this up here. When the sell-off sort of really began on Monday into the afternoon, and then the early hours, we found really good resistance for both of those. So if that is to continue, and it's around this sort of area as you see, let me just get Monday's lows, today highs, then absolutely we could sort of continue to drift down from exactly where we are now. So big areas just ahead of where we are. I'll finish off with the FTSE, as obviously I know the guys in stage 2 are currently trading that. You found good resistance at the pivot today. We're keeping an eye on that correlation with the pound. If the pound was to maybe push through R1 for the first time in a few days, then you could start to see maybe the FTSE start to drift down. But we're in a nice sort of range with the pivot at the high of the day, which is also a nice pullback area. Any questions, obviously get them into the chat, and as I mentioned, my stream will be running all day, so any ideas, trade setups that develop throughout the day, I'll obviously be putting in there as well. But if I don't speak to you, have a good trading day.